Hey, what's up, everybody? Welcome to episode number 51 here on season 1. Today is a Thursday. Anyways, we are going to talk about strategic ETF investing versus technical ETF investing. So this idea comes from a week ago on Monday. I had one of like my mentors when I was younger. He was like a small group leader. Had hit me up and was like, "Hey, I got this guy coming up from Sage, whatever investing company, or I don't know what their actual company. I know it's Sage, but I don't know what the after that is. Anyways, so he was like, he's coming out. He's the account manager. He's like the VP of marketing and whatever. Anyways, he's like, you want to come out and sit and chat with us. He's going to be in San Diego. You want to come out and kind of sit and talk with us. Just so you can ask him questions about investing and that kind of stuff, and kind of figure out what they do for their investing strategy, since they're like a account manager or whatever of people's money." So anyways, I was like, sure, why not? What the heck? What do I got to lose? So I showed up, and his company, so there's like strategic ETF investing, but his company does technical ETF investing. And so I just wanted to talk about the two different sides, because at first I didn't understand it. It kind of sounded very similar, but then after he started to share more, I was like, oh, okay, that makes more sense. So I guess we'll dive into what is strategic investing, and then ETF investing, and then what is technical ETF investing. So strategic ETF investing, you're going to have like asset allocation, which is going to be like something similar to Acorns, where you deposit your money, and then when a stock like starts to drop, so like if you're supposed to have a ETF at 30% and it drops down to like 25, it'll sell some shares from over there to rebalance the account. So that's basically what it means, is that the asset allocation is that it's going to continue to rebalance and keep those percentages of what they are. Also, core holding, which would be like just investing your money into a few different ones, and that would be just like straight up, like not different asset allocations, so not percentages, just like I'm putting $5 here, $5 there, $5 there, $5 there, $5 here, $5 there, $5 there, $5 there. So every single month or whatever, that's what that would mean. Diversification, obviously, that's going to be into a whole bunch of different other ETFs and that kind of thing. So those are kind of the strategies to strategic ETF investing, which strategic also, after doing some research, I found out that strategic investing is more like a passive ETF investing strategy, which means that the fees on those accounts are going to be a lot lower. So like a thing like Acorns, which is a passive investing account manager, it's going to be a lot lower than like something that's more active, which would be like a Sage investing company. So the reason why it's passive is because there's not a whole lot of trades, and they kind of just try to mimic the market, because you're just invested in those stocks, so it's going to mimic the S&P 500 or the NASDAQ. Where in a technical or active ETF investing strategy, they're going to use things like daily or moving averages, SSMOs, bollinger bands, and volume, that kind of stuff. And what that's going to do is it's going to, it's possible that you could outperform the S&P 500 or the NASDAQ over a certain period of time. What he was saying, the reason why they do technical ETF investing is because they figured out a way to create less volatility in people's accounts while still being able to keep that 7 to like 10% return. So a normal like passive account, you're going to see a lot of like this with the market. However, theirs, because they're able to average it a little bit better, is going to be like this, but it's still going to rise at 7%. So what their idea behind that is, usually, when you get up, people like to sell or when you get up a little, people start pulling out their money. When you get down, people especially pull out their money. So what he's saying is, if we can limit the volatility, people will keep their money invested in us longer. Thus, their company can make more money, and thus you can make more money as well. So it's almost a win-win for both companies, or for you, the person, and then the company. Also, in active or technical trading, technical ETF investing, the account managers and all that is going to be a lot more expensive. The account fees are going to be a lot more expensive, which is understandable because people are always going to be trading those ETFs regardless. So it's like, 1 week you could be in one ETF, and then the next week you might get sold, and because of whatever healthcare falls through or something like that, we have a depression, or we have a crash over in Europe, and you are in ETFs over in Europe, but they're going to sell those first, and then they're going to reallocate your assets from there and put them into a different ETF that's probably going to go up with that one going down. So that's just how they do it. That's pretty much the only difference. Is one is active and managed, and it's based upon technical analysis, where one is strategic and it's based upon more long term. Both of them are long term investing strategies, but one's gonna like set it and forget it kind of strategy, and one's more actively managed. Outside of that, I guess let's go ahead and dive into the question of the day. The question of the day is, if you were to write a book, what would it be about? This is a question I've thought for a long time, and I've never really thought, I never came up with the best idea, but if I did, it would probably be like knowledge for myself or something. I don't know. I've tried to write a few books. One of them would probably be about running, my journey with running and health and fitness. Maybe my vegan journey. Probably I'd like to write a autobiography about myself. I think that would be very fun. Outside of that, I don't really have an idea of what kind of. Maybe eventually I'll write a book about investing in the stock market and investing in general. So yeah, I hope that gives you guys a little bit of insight into what I would write a book about. Anyways, if you guys have the answer to this question, post it down below. I would love to read your comments. If you guys have any questions for future episodes, go ahead and post those down below too. And as always, I will get them on the next episode. And until next time, don't forget to subscribe up here. Check out Why Should I Have a Roth IRA? And don't forget to check out this other cool video right here. And until next time, thank you for watching. I really appreciate it.